trend identification, evaluating momentum, identifying reversals, overbought, oversold conditions, divergences, and more. All of them in one indicator, a powerful multi-purpose indicator that can effectively help you in trading. I'm going to teach you a very accurate trading strategy based on this indicator, so just make sure you watch this video until the end and let's get started. Before I add the indicator, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. Alright, to add the indicator to our chart, here we click on indicators and we search normalized T30 oscillator, this one, which is written by Back Quant. Alright, this is the indicator, and as you can see, it's added here below the chart. As I said, this is a multi-purpose indicator that can help you in trend identification, evaluating momentum, identifying reversals, overbought, oversold conditions, and divergences. This indicator is built based on T30 moving average, which is a popular type of moving average because of being smooth and responsive to the price action. Volume also plays a role in T30 moving average. This indicator turns T30 moving average into an oscillator, and then the values are normalized so the indicator can provide a standard range of output. This histogram that changes color between green and red is T30 oscillator, and each of the bars are actually the value of T30 oscillator. We have also a white line here, which is a moving average of the T30 oscillator, so it is a smoother version of the T30 oscillator, and it's actually our signal line, and it will help us to have a clear picture of trend and also momentum change signals, which I will explain it later. We have a red zone here which shows overbought condition, and we have a green zone here which shows oversold condition. First, we go to the settings of the indicator to optimize the settings so the indicator will better performs for trend identification and the strategies that I'm going to explain. Here for normalization period, we set it at 200, and by doing so, the T30 oscillator becomes smoother and less responsive to price action during the pullbacks, so the indicator will not repeatedly change above or below the center line during the pullbacks, so not giving misleading signals. Here for signal line, which is this white line that I just explained, the moving average type is set at simple moving average by default with length of 18, and here there is a list of different types of moving averages to choose, but I prefer simple moving average because I don't want to have a too much responsive signal line, and a simple moving average is a good choice. Alright, now let's see how we can use this indicator for trading. As I said, the histogram is T30 oscillator, and it can help us with trend identification and momentum evaluation. If you remember, we increased the length to 200, so now it will better help us with longer term trend of the market. When the histogram is above the center line and green, it tells us that the market is trending up. In this part, you can clearly see that the price is advancing in an uptrend, and you can see that the histogram is above the center line and green. The lighter the green color, the stronger is the upside momentum, and the darker it becomes, the weaker is the upside momentum. So during the pullbacks where the price is moving against the trend, we see a darker green, and in times that the price is advancing strongly, we see a lighter green. On the other hand, when the histogram is below the center line, the color is red, and it tells us that the market is trending down. In this part of the chart, you can clearly see that the price is in a downtrend, and the histogram is below the center line and red. The lighter the red, the stronger is downside momentum, and the darker it becomes, the weaker is the downside momentum. So during the pullbacks where the price is moving against the downtrend, we see a darker red, and in times that the price is declining strongly, we see a lighter red. So when the histogram is above the center line and the color is green, it tells us that the price is moving in an uptrend, and on the other hand, when the histogram is below the center line and red, it tells us that the price is in a downtrend. As long as the histogram is above the center line, we still have greater upside momentum in the market, but when the histogram goes below the center line, it means that we have greater downside momentum in the market, so it tells us that the price is moving in a downtrend. In times that the histogram crosses above the center line or below the center line, it can be a signal for starting of a new trend, so a great opportunity to enter a trade. But this is not always the case, and in times that the price is in a trading range, and the market is not actually trending, we can have false signals like this one here and this one here. You can see that we just had a small movement of the price after the signal and not beginning of a new trend, because here the price is in a trading range, and because of the larger swings of the price in this range, we have a change in position and color of the histogram. So if you want to use these center line crossovers as buy sell signals for beginning of a trend, you need more confirmation that a trend is really happening in the market with higher probability. I recommend using this indicator just for trend identification, which means that in times that the histogram is above the center line and green, we say the market is in an uptrend and we should look for long position opportunities somewhere in the pullbacks. And in times that the histogram is below the center line and red, we say the market is trending down and we should look for short position opportunities somewhere in the pullbacks. By the help of this signal line, this white line, which is actually the moving average of the T3 oscillator, we can find trading opportunities in the pullbacks based on the crossovers of the T3 oscillator and its signal line. Let me show how it is done in practice. In this situation, when the histogram is below the center line and red, which tells us that the market is trending down, in times that the histogram goes above the signal line, it can tell us that probably a pullback is forming on the chart. And then when we get a candle closed back below the moving average line, it tells us that probably the pullback ended and the price is going to decline more. So we can enter a short position here when this new candle is opened. The stop loss above the previous swing high and the profit target at 1.5 risk to reward ratio. Another example here, you can see that the histogram went above the moving average line, telling us that probably a pullback is forming on the chart. And here you can see that we get a bar closed back below the moving average line, and this tells us that probably the pullback ended and the price is going to decline more. So we can enter a short position at this point when this new candle is opened with the stop loss above the previous swing high and profit target at 1.5 risk to reward ratio. But to run this strategy and trading based on these signals, you still need to add another indicator that can help you in times that the price is moving flat. For example, here you can see that again the histogram went above the moving average line, and here we got a bar closed back below the moving average line, as you can see. So in practice we would enter a short position at this point, but this trade is a losing trade. You can see that the price advanced after that and hitting our stop loss. So we need another indicator that can filter signals like this that happen during flat market. One good match indicator for this purpose is ADX, this one, average directional index. And by the help of this indicator, we can filter the signals that happen during flat market. First, we add a horizontal line here at 20 level because 20 is our benchmark to decide if the market is trending or not trending. In times that ADX line is above 20, it tells us that the market is trending, so we take the signal, and in times that ADX line is below 20, it tells us that the market is not trending, so we do not take the signal. So for this trade, you can see that ADX line is not confirming because it is below 20. But for this trade, you can see that ADX line is above 20, so it was confirmed by ADX. But for this one, which was a profitable trade, ADX line doesn't confirm because it is below 20. Please pay attention that by using these crossovers between histogram and the signal line, you are actually getting signals on very short-term momentum changes that are happening in the market. And with this setup, although you can filter some false signals in flat market, but you will also lose some good trading signals like this one because the momentum of the market is not built yet, so the ADX line is still below 20, and still you can encounter false signals when the trend is making its top, because as I said, these crossover signals that happen between the histogram and signal line are showing every short-term momentum changes that are happening in the market. These crossovers are good for evaluating momentum changes, and they can offer good trading opportunities as I showed some examples, but in practice you can still encounter many false signals because as I said, they are showing every short-term momentum changes that are happening in the market. A better option is adding another indicator for buy-sell signals and using this indicator only for trend identification. A good match is Andean oscillator, this one, which is an editor specs indicator and written by Alex Grover. Alright, this is the indicator, and as you can see, it's added here below the chart. Let me show how you can trade based on this setup. In Andean oscillator, we have three lines: green, red, and orange. When the green line is above the other two, it tells us that the price is advancing. When the red line is above the other two, it tells us that the price is declining. And in times that the orange line is above the other two, it tells us that the price is moving flat. As I said, when the histogram is above the center line and green, we look for long position opportunities. We look for the times that the green line crosses above the red line, and then after that crosses above the orange line, exactly like what happened here. We don't take signals where the green line goes below the orange line and then again crosses above the orange line. These are very short-term momentum changes, exactly like what we got earlier by the help of these crossover signals. We don't take these signals. We only take signals like this one, where the green line crossed above the red line and then after that crossed above the orange line. When you have this signal while the histogram is green, it's a confirmed buy signal and you can enter a long position at this point when the new candle is opened. The stop loss for this trade is placed below the previous sewing low and profit target at 1.5 risk reward ratio. Moving back on the chart to show you some more examples, here you can see that while the histogram is green, in Andean oscillator the green line crossed above the red line and then after that crossed above the orange line. So here we have a confirmed buy signal and we can enter a long position at this point with the stop loss below the previous sewing low and profit target at 1.5 risk reward ratio. And on the other hand, when the histogram is below the center line and red, which tells us that the market is trending down, we look for short position opportunities. In this situation, here in Andean oscillator, we look for the times that the red line crosses above the green line and then after that crosses above the orange line. As I explained earlier, we don't take signals like this where the red line goes below the orange line and then again crosses above the orange line. We don't take signals like this. We only take signals like this one where the red line crosses above the green line and then after that crosses above the orange line. So this is a confirmed sell signal and in practice we could enter a short position at this point with the stop loss above the previous sewing high and the profit target at 1.5 risk to reward ratio. Please pay attention that although this setup is very accurate, but it doesn't mean you will not encounter false signals. There is no indicator or trading strategy with 100% win rate, and losing positions are always part of the game, so you need to manage your risk properly. There is a risk management strategy that is called 1% rule and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.